Problem 7A-2. Not to be confused with exercise 7A-2, which was a previous problem. We're going to calculate gross pay in deductions this time for 5 employees. So September company has 5 salaried employees, so nobody's hourly, therefore we're not going to get overtime. So we can ignore this overtime column here because all these employees are salaried. So your task is to use the following information to prepare a payroll register to calculate net pay for each employee. All a payroll register is this table down here. Notice it lists the employees. And now the thing to know about a payroll register is you do one for each pay period, so the employees listed here are only the ones that were paid during this particular pay period. So we have some information here. So in this data table, we have names, marital status, and then cumulative earnings before this payroll, the biweekly salaries, and the department. And back here we have the assumption things. So it's reminding you like Social Security is 6.2% on the first 142,800 of earnings, and then that Medicare is 1.45% on all earnings. And then number 2, that there is a $35 medical insurance that comes out each biweekly pay period. The state income tax is 4% of the gross pay, and that the federal income tax is calculated using the withholding table that's included back here. All right, so it says prepare a payroll register to calculate net pay for each employee. Prepare the register for the biweekly payroll period. Round each calculation to the nearest cent is needed because we are, again, dealing with currency. If an input field is not used in the table, leave the field empty. Do not enter a 0. Abbreviations used. Year YTD is year to date. FIT is federal income tax. SIT is state income tax. And then for the purposes of this problem, we will ignore the taxable FUTA and SUTA earnings. That will be in the next chapter. So I'm going to open up this data table with the employee information. So notice here, scoot it over so we can see everything, or most of everything. So notice here that single for the marital status has already been populated in this first column. So now the first column we need to work on is prior earnings year to date, right here. Now don't get this confused with over here, current earnings year to date. So current earnings year to date will be the prior year earnings plus our gross pay. But first, let's fill out the prior earnings year to date since we have it here already given in this column and input it here. And we can go ahead and copy and paste. I recommend you do the same. If we're done, 39,000, 35,000 for Herman. You'll notice those are last names there in our register versus the information. And if you would like to, you can put this in an Excel spreadsheet. You can go ahead and do that with homework or even a test. It can help you learn Excel better. All right, now we're going to add up these salaries. So we go ahead and after adding those up, we get 429,750. So we can now move this over because we will need to be inputting here our regular earnings, which will be coincidentally here, biweekly salary. So we can go ahead and do the same thing, copy and paste each of these. And notice that we will be leaving the overtime column here alone. So adding those through, we get $7,750. And then because these employees did not get overtime, the gross will be the same as the regular here. So go ahead and either copy and paste or type it over. Notice I hand entered commas here. I actually don't recommend you do so. You won't be marked wrong for not doing it. And also it does leave room for error if you do enter them, because sometimes you can put in two or period on accident. Okay, so now we can see our data. We'll go ahead and close out of this. So current earnings year to date, remember, will be the prior year to date earnings plus the gross here. So for practice sake here, we can use the calculator, or you can do this again on your own. So we'll take the 3,900 here for done, and we will add the 1,350. And then we can go ahead and click in the cell and hit the enter key. And then we'll go ahead and do the same for the rest of the employees. So for Herman, 35,000 plus 1,450 equals 36,450. And next, make sure we clear out each time here. We will get 53,800 for Roberts plus the 1,700 growth equals 55,500. Click in the cell, enter. And then we have Bothwell, so that's 141,950 plus 2,140 for 144,090. And then Ackerman, 160,000 even plus 1,110 biweekly earnings. Click in the cell, enter that through. And then when we add those all together, we get a total of 437,500. And notice I did miss a number here, so let's re-enter that. So we're going to have 160,000 plus 1,110. And that equals there, and enter that through. So this next part gets a little bit tricky. So we're moving on to Social Security here. So Social Security, if we look at our assumptions here, the base for that is 142,800. So we can keep that up here as a reminder. And if we take a look, it looks like a few of our employees here have hit that. So we can see the first three here done, Herman and Roberts. We can see that their previous and current here have not hit that wage base. However, here with Bothwell, he hadn't previously made the amount here of 142,800, but his earnings year to date have crossed that limit. So part of his wage here out of this gross amount will be taxable earnings under Social Security. So that's going to be a little bit of a calculation there. And notice here with Ackerman, he has crossed that wage base previously, so he will not have any Social Security coming out here. So again, if the employee has made more than $142,800, they no longer have to deduct Social Security. However, this one, Bothwell, he's kind of sitting on both sides of the fence here as far as his earnings for this pay period. So again, we're going to do that calculation on the portion of wages that are eligible for that Social Security. So let's go ahead and see. So before we go ahead and do that calculation, let's actually fill out the first few employees here for their eligible amount, which will be the full amount for each of these first three. Copy paste or just input, and then we will get to calculating Bothwell's Social Security here. Let's take a moment to review. Which is the taxable part? The gross pay over the wage base or the gross pay under the wage base? It's only the part under the wage base that is taxable, so anything that's overflowing out of the cup over that wage base limit is no longer taxable. So in order to get to that wage base of 142,800, I'm going to go ahead and type that in here. We need to subtract out his year-to-date earnings. So that'll be 141,950 to get a total of 850 of the rest of his wage that will get him to cross that threshold. Because again, his biweekly earnings kind of saddle a little bit on one side of that wage base. So we'll go 850 right there. And then for Ackerman, none of his wages are then going to be deducted for the Social Security here. So note we did leave these overtime spaces blank and the Social Security here for Ackerman blank because again, it said do not enter 0 here. So leave the field empty. And then go ahead and add these through for a total of 5,350. And then let's go ahead and check our answer. Excellent. Okay, so now part 2 of this problem for the deductions comes up here. So we'll go ahead and start calculating the Social Security here for done. So note we just got the taxable earnings for Social Security here. So we can pop open our calculator and then we can start by inputting the 1350 multiplied by 6.2. We can hit the percent key for 8370 for done. And then we're going to have to scoot this down a little bit as we go here. So then for Herman, we have 1450. That is taxable for Social Security. So we can again put 6.2 and hit the percent key or move that decimal over. So we'll have 8990. And then Roberts will be the 1700 here. So we'll take 1700, multiply that by the 6.2% for Social Security for 105.40. Bothell will be that special case again that only 850 of his paycheck that gets him to that wage base for Social Security will be taxable, so we get the 6.2%. Use that percent key again, that's handy. So his will only be 5270. And then Ackerman will be blank because he has 0 wages that are eligible then for that Social Security since he has passed that 142,800 wage base. So we can go ahead and total that up for 331.70. So let's move on to the Medicare deduction here. So we will open up our information again, scoot it up so we can see our table. So under Medicare, remember there is no wage-based limit, so we will use the entire biweekly earnings for each and multiply that by the 1.45% rate for the Medicare. So 1350 into the calculator, multiplied by 1.45%. So we're going to round that one up there. So it will be 19.58. And then we can go ahead and clear out and move on to Herman. And for Herman, it's 1450 times 1.45% for 21.03. Again, we're rounding up to the nearest cent. We can clear that out. And for Roberts, it's 1700. We're going to multiply that by the 1.45% for an even 2465. So we can hit that enter key, make that easy for us. And then Bothwell here. So we're going to take 2140 times 1.5%. 3103, make it easy, hit the enter key. So it populates. And then Ackerman will have the Medicare deduction here. So let's go ahead and take the 1110 and multiply that by 1.45%. And then we can go ahead and round that up to $16.10. And just to conserve time here, I'm going to fill this in 112.39 for the addition for this column here under Medicare for all of the employees. So now we're going to go ahead and move on to the federal income tax deduction here for each of these employees. So remember, the federal income tax we'll be able to look up on our withholding table that is included back here for the biweekly payroll period for these single employees here. We're going to start by looking at Samantha's biweekly salary here of $13.50, and then we're going to go down on our table and find that it falls between that third row of the adjusted wage amount is at least $865, less than $2,041. So we're going to go ahead and do some calculating here. I'm going to take the $13.50 less the $865 for $485, and then we have to get the percentage here of 12% from that for $58.20. And then we're going to add the $38.20 here. So let's go ahead, $38.20 plus $58.20 equals $96.40, and we'll go ahead and enter that here. And notice also for these next two employees and this last employee that they also will fall in that same tax bracket. So we can go ahead and use the same formula here and take the $865 away, multiply it by 12%, and then add the $38.20. So let's go ahead and continue and move on to Herman here. So Herman makes $14.50. And we're going to subtract out the $865 per our table. Multiply that then by the 12% for $70.20. But then we're going to have to, of course, add the $38.20. So let's go ahead and do that here. For a total of $108.40 for the federal income tax for Herman. Go ahead and enter that through. And notice these are going to be numerically the same if we did add the 0 on the end here for each of these. So we can have it as a 108.4, or we can add the 0 to make it the 40 cents here. And we can go ahead and move on to Roberts. So Roberts makes $1,700 and it falls in that third tax bracket. Multiplied, subtract $865 and then multiply by 12%. For $100.02. I'm going to go ahead and clear this out here and add it manually because after hitting the percent key, for some reason here in my accounting lab, it does give you a funky number. So 38.20 added, so 138.40 for Robert's federal income tax. And then we can go ahead and move on to Adam Bothell here, and then notice his biweekly salary here does actually fall in the fourth row on our withholding chart here. So let's go ahead and calculate his federal income tax. So we're going to take the $21.40 and the amount to subtract out from that is $2,041. And then we're going to multiply that by 22%. So go ahead and hit 22 and percent. 2178, but then we have to add 179.32. So 2178, let's remember that number and retype that in because after hitting the percent key again, it's going to mess with us. For 201.10. And then we can go ahead and clear out and go to Lynn Ackerman. And his biweekly salary will fall under the third row. So let's go ahead and type that in here. And then we will subtract 865 multiplied by 12%. And then add that 3820 back. So 2940, remember that number, plus 3820 for $67.60. And we can add the 0 or just leave it off. It won't mark our answer incorrect for that. And then you can go ahead and add those through for a total of $611.90. Okay, and then we can go ahead and clear out. So moving on here, we're going to calculate the state income tax, SIT. So remember here, we have our assumptions. And that state income tax is 4% of gross pay. So no limit on that. We can start here by going with Samantha Dunn's biweekly salary of $13.50. $13.50 and multiplying that by 4%. We'll go ahead and do that for all of these. 4% of each biweekly salary. So $14.50 for Herman, and we're going to multiply that by 4% for 58. We can add in the zeros again or not for the decimal. So then for Bradley Roberts, 1,700 times the 4%, 68. And then Bothwell, we will take his 2140, 8560. Then we have Lynn Ackerman here, 1,110, 4% of that number is 4440, or 0.4. And then we can add these guys through for a total of $310. And then we can move on to the medical insurance. So here's the fun part. Remember when we pop this assumptions open, each employee contributes $35 biweekly for medical insurance. So each person is just going to be straight across $35 that we can input in our table here. So 35 for everybody, and you get 35, and you get 35, and you, and don't forget Ackerman. All right, and then let's add those through, 175. And then we can go ahead and move on to net pay here. So then for net pay, we're going to take that biweekly salary, that gross pay, and we're going to subtract out all of these deductions for net pay. So let's go ahead and start with done. We're going to take $13.50. We're going to subtract out the $83.70, and then we're going to subtract out $19.58, and then $96.40, $54, and that fund medical insurance for $1061.32. And then same thing for Herman here, $14.50 less all of his deductions. So $1,137.67 here for Herman. And I'm gonna fix this one up here. We had 1006132. I'll go ahead and clear that out. And we'll move on to Roberts here for 1,700, less all of those fun deductions. So 2465, 3840, 68 minus 35. So we have 1,328.55. And then we'll select the next cell so we make sure we don't lose our answer. So 2140 for Adam Bothwell. And then we're going to subtract out all of his deductions. So 5270, 3103, 20110, 8560. Okay. 1734.57. That matches up here. And then we'll clear out and go to the next cell here so we don't lose our last answer. So 1110 right into the calculator for that biweekly salary for Lynn Ackerman. And then we're going to subtract out his deduction, so no Social Security for him, but Medicare does come out $67.60 for his federal income tax, $44.40 for his state income tax, and $35 again for that medical insurance. Go ahead and input that $946.90 there for Ackerman, and then we can add up all of that net pay here for $6,209.01. And now for another easy and fun part, we can just go ahead and close out of our calculator. No more calculating. Yay! We'll move on to our portion here. If we could scoot this out of the way, it says distribution of expense. So we have to figure out who's in what department. So let us start then with Dunn. So Samantha Dunn, she's in customer service. So all $13.50 of her wages will go there. And then for the office workers, we'll do the same. So Herman is office. Roberts is also office. So his is $1,700. And then we'll go on to Adam. Adam is customer service, so we'll make sure his pay goes there. And then Lynn Ackerman is customer service as well. So we'll go ahead and put his 1110 there. Then we can go ahead and add those through for each department. So they're probably keeping track of each department's wages here. Gross wages, $31.50. And again, we left those spots blank. That's great. Oops, and I'm noticing here that we had 35 here at the bottom when in fact the sum of those 35s is 175. So let's go ahead and then enter that in and then check our answer. Good job.